Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's been a very interesting week on the markets, but let's start off as we all normally do with the S&P 500. And we talked about this incredible breakout that we'd seen in the last few trading sessions. It now seems to be sort of consolidating.
It is indeed. So here's the S&P 500 chart on the screen. And this upward sloping channel is still very much intact. It's been intact since April of this year. Last week, we pointed out the fact that this market had moved up into all-time high territory, so it had broken above the January high. And that little gap that I've highlighted on the chart there, 28.75, that gap actually happened on the day that it broke through the prior high. Now, what it's doing at the moment, as you mentioned, it appears as if it's beginning to consolidate, which I think it is. That gap might very well come into play down the line in the next couple of days or weeks, maybe. And that's at about 28.70, 28.75. If it slowly consolidates into that area, that's where it might find some support. If it pulls back further, it's possible that it could do that. But in any case, overall, this setup is still very bullish. You can see rising highs, rising lows. There's nothing really not to like about this chart.
Yeah. What about our own market? And this is a bit of a... sorry, before we get to that. It was the NASDAQ, of course. I've forgotten about last week's trade.
Yeah, that's right. So we did a trade in the NASDAQ, and that's why I bring it up this week, and then we'll look at our market. This is the NASDAQ 100 index, and like the S&P 500, it's been trading in this upward sloping channel since April of this year. Nice, healthy pattern of higher lows and higher highs. Last week on the show, we identified this triangular pattern at the end of the chart here, and it was beginning to break to the upside. And I took that as a cue to go long for a higher target. So we went long of $2 per point at 75.30 with a stop loss below 7,400, and we're looking here for a target of 7,800. Now, what I suspect might happen is a bit like the S&P 500, is it might beginning to just consolidate a little bit. But overall, this is still a very bullish setup to me. So I'm quite happy to remain long here for the time being. While that upward sloping channel is intact, I think you've got to stay bullish on the NASDAQ.
Yeah, okay. And then a quick touch on our own market, because it influences the trade that we've taken this week, which is also turning to be out to be rather interesting. Yeah,
it is. So we'll talk about it more in a few minutes, but I mean, this is the top 40 future that we always look at in this part of the show. And it has broken out through that major overhead resistance. As you can see, we pointed that out last week on the show. The move above 52,000 here is bullish. It's now come back quite sharply over the last couple of days, and it's been retesting this 52,000 support area. We will revisit this in a few minutes because we've got a trade on this for this week's show.
Yeah, okay. So let's leave people hanging. But in the interim, your trade in American Express has been a really nice one this year, and there haven't been too many of those. No. I mean, it's a trade where you've actually been able to move, to have a trailing stop loss.
Yes.
And move it higher.
That's right. So we've got we've taken profits on it this week, but just to go back and have a look at why we did this trade. The stock was trending higher. It's a strong stock in an overall strong market in the US at the moment. There was that falling wedge pattern that I've identified there at the end of July, and when that began to break to the upper end of that triggered a buy signal. A falling wedge within an uptrend, like we're seeing here, is what we term a continuation pattern. So it's basically a consolidation within an overall rising trend, and it usually breaks in the direction of the prevailing trend. And effectively, it's a case of buy the dips or buy the pullback, exactly what we did here. So we went long of 80 CFDs at $100.60. My stop loss was $98.50, and the stop loss was never even flirted with. So it was one of these trades that worked off the bat, which is always a good sign. Initially, I was looking for a move back to the prior high where the wedge had begun to form, which is $104. But at that stage, I said, let's just give it a bit more room to run because the market's looking strong. At that stage, the S&P 500 was looking as if it was about to break to a new high. This stock was still looking pretty strong. So we said, let's just give it the benefit of the doubt. Let's run the profit and see whether we can't extract a bit more out of this trade.
Which doesn't sound exceptional, but in a market where you've almost been forced to not quite to take profits where your trade hasn't quite met the target. This was a bit of a change of pattern in the last couple of months. It
certainly was, because you're right. I mean, previously we had actually been banking profits before targets even got reached, and that worked quite well for us. So this was a little bit of a change of strategy, And we decided to let it run. And what I'd said was that the trailing stop loss we would use would effectively be a prior day's low. So what you do is you look at each daily candlestick pattern, look at what was yesterday's low, and today that is your stop loss, right? And as the price ratchets up, so you move your stop loss up with it. And the result is that the first time your prior day low gets breached to the downside, that triggers your trailing stop loss. And that allows you to stay in the trade. It allows you to stay in the trade as long as it's trending higher, but it also protects your profit and gets you out if things start to turn. And that's exactly what happened on Wednesday last week. You can see a break of that steep upward trend and a break below the prior day's low. And that's what ended up resulting in us selling out at $106.50 here. And you can see since then it's been pulling back. So we actually did quite well to sell at that level. What it did is it resulted in a profit of $439 after all costs were taken into consideration. So that is one of our most profitable, in fact I think it might be the most profitable trade that we've had on the offshore account this year. So all in all, very good story.
And sadly with the rand now at 15.20 to the dollar, it's that much more profitable.
Exactly, it's a whole lot more rands than what it would have been only 6 weeks ago.
Okay, well, which takes us to today's trade. And I don't know if you want to go through the thinking behind it, the mechanics of it, and then the revelation of where you are in it.
Yeah, so let's do it. Let's just have a look at the trade and then we'll talk about what's happened subsequently.
Okay, let's talk about theory first, practice second.
Exactly. All right, so here's our daily chart of the top 40 futures. This is the same chart that we looked at a couple of moments back. And what I'd pointed out was that the market had broken above this big overhead resistance area at 52,000. It had rallied, pulled back, and it seemed to be finding support at around about 52,000. Yesterday it reversed up off that level, and this morning at the time I did this, it was also looking as if it was reversing up off that 52,000 level. So I decided to go long. This is it now. That was a daily chart that we looked at. This is now a 15-minute intraday chart of the top 40 future. And what I'm specifically looking at here is this support zone at 52,000. You can see how it was tested yesterday and the day before, and again this morning. It flushed through 52,000 and began to reverse up on the 15-minute chart. And that to me signaled a buying opportunity. As long as it was holding above that 52,000 area, I was happy to be long. So I did go long. I bought 2 ALMI futures. Now, just to differentiate between the ALMI future and the ALZ future. An ALZ future represents 10 Rand per point. All right, so an ALZ, it's the big contract, if you want to call it that. At 52,000 index points, 10 Rand per point means that one contract is giving you exposure to 520,000 Rands worth of market exposure. Now, the ALMI future was introduced a few years ago as like a mini future. And this is 1/10 of the size. So what it means is that every index point here represents 1 Rand. So at an index level of 52,000, it means that one contract is giving you exposure to 52,000 Rand.
So it's much more palatable for a retail investor, in other words.
Yes, it is indeed. And if you're a beginner trader, it's a good place to start because you don't have to take the big exposure that you would on an Aussie future. Yeah. So we went long of 2 of these. So effectively, we're taking about 104,000 Rands exposure on this, and the stop loss at 51,760. So if I quickly run through the mechanics of this, as I said, we're going long at 52,060, stop loss 51,760. The risk therefore is 300 points. 300 points multiplied by 2 Rand per point, because remember I've done 2 of these ALMI futures. So effectively means I'm risking 600 Rand here. If I'm wrong, I can lose 600 Rand. My exposure, as I said, is about 104,000 Rand with these 2 contracts. My target, I said I was looking for 53,000 to 53,500 as a loose target, all right? And the risk to reward ratio, therefore, is 1:3 based on a 53,000 target. Okay. All right, so here's the revelation.
So here's the nub.
The reveal, right? I've just had a look on my phone, and the stop loss has been triggered. So I think it's the first time ever in 9 years of doing this Traders Corner program that the trade has been stopped out before we even got to recording it, let alone going to air.
Well, I have to ask what time you did it this morning, because...
It was at about 10 o'clock this morning. I actually tweeted it out for those that want to see. I put it on Twitter with that graph that I showed you and said it looked good, and it did look good for a little while.
For all of 5 minutes or so.
Clearly not very long until this, as I say, but in the time between me driving to the studio and us sitting here, this trade has been stopped out. So we actually lost the 600 Rand.
It was only 600 Rand. I suppose, and the other thing is though, you don't have automatic stop losses, you run manual stop losses. Yeah. So were you, closing out that trade with one hand as you were driving to the studio with the other?
In this case, often if I have to not be at my screen or in certain circumstances, I will use an automatic stop loss. In this case, I knew I was driving into the studio to record the show. It didn't look as if the stop loss was going to be in jeopardy at the stage I left home to drive here. But anything can happen in the market, and anything has happened.
Anything does. And actually, is that the lesson really of this trade? Is that if you have good risk management, you will not get taken out by the market, because today is utterly savage out there. Yeah. Unfortunately, fortunately, it's not just the JSE. We are in an emerging markets hellhole right now. Yeah. We're not Argentina, for example, which is going through torment. Yeah. But if you don't have an adequate risk, I suppose, strategy, you really can get cleaned out.
You definitely can, and that's what we always say on this show. I think one of the things that's made us successful over the 9 years that we've been doing this is the fact that our risk management has always been very, very diligent. And that's critical as a trader. Getting a good entry is fine. Executing a stop loss, though, is so, so important. And managing your risk. That is, at the end of the day, always where your success or failure will be determined as a trader is in your ability to manage the risk.
Yeah, okay. Well, it's going to be very interesting to see what happens with the South African and emerging markets in the context of all hell breaking loose out
Indeed.
there. Guys, let's have a look at the portfolios, because notwithstanding today's hiccup, the local portfolio has done really well this year.
It has. So there's our local portfolio with a couple of recent trades, and this obviously today's trade on the ALMI. So it's saying we're up 17.5%. You can take 600 Rand off that total. As it is now. And then the offshore portfolio is doing well for us. We took our profit on the American Express trade, as I mentioned, and then that NASDAQ trade is also looking quite good for us. We're up on that. So we are up 11% on the offshore portfolio now, so looking good there.
And of course, if the Rand continues where it is, hopefully not, I'm sure it'll rally a little bit, but this is going to flatter the offshore portfolio that much more when it comes to the final reckoning at the end of the year.
It will indeed. I mean, when we take what we put into this offshore portfolio in January and then reconcile it all back in December when we finish the show for this year, at the current exchange rate, we're getting a lot more Rands per dollar than what we were in January.
Yeah, okay, so that's how the portfolio stack up. Just a reminder that you've got a course coming up shortly.
Yes, the 15th of September in Johannesburg. I'm running a full-day high probability trading course. It's a spring promotional price of 1,990 Rand per person, and with that you also will get a 3-month subscription to Traders Corner thrown in as well. So anyone that's interested, please email me, garth@traderscorner.co.za, and I'll send you all the details.
And Garth, unfortunately, I am going to miss the next couple of months, or the next few months, because I'm going on maternity leave.
Yes.
So that was a bit of an unexpected event in my life. So I'm really going to miss hosting the show, but my colleague Bronwyn Seaborn is going to take it over for the viewers, and there will be continuity. Yes,
that's it. Yeah, wonderful news for you that you'll be paying a dividend, I think, is what we call it in the market.
Maybe.
So all the best to you.
Possibly more of a tax, really, at this point in time.
Well, with 2 boys, I can tell you it is a bit of a tax, yes. But yeah, all the best to you, and we will see you again on the show next year sometime.
Indeed. Garth, so let's leave it there. Thanks, as always, for this show and also the shows of the last few years. Garth is, of course, founder and editor of Traders Corner.